A Crackup Boom, or also a hyperinflation. That's a term that Ludwig von Mises used in his work. And basically, that happens when the markets and also consumers, everyday people, realize that inflation is a deliberate policy by the government.
This is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Mario Ineko from the Mineko64 YouTube channel. Mario, thank you so much for joining us today.
You're welcome, Elijah. It's nice to be here again.
Well, it's great to have you. We're seeing a lot of things happening in the world right now in the world of finance. We're seeing gold making all-time highs, silver moving pretty well too. We are also seeing the Federal Reserve move to cut interest rates. This last meeting, they held interest rates constant, but they say that probably about 3 rate cuts or so this year. And other central banks are also moving to cut rates. Your perspective on what is happening with central banks first, and I guess we can move into the metals later.
Yeah, central banks, I think most people expected the Fed to point towards 3 rate cuts later this year, even though Powell is still a little bit on the fence, saying that it still depends a lot on the data. But the more interesting thing I noticed from the press conference, which I had the pleasure to watch, was that he said they're going to slow down the rate of QT, or quantitative tightening. That's how fast they wind down their balance sheet. So I thought that was very significant. As per the other central banks, we saw, to me, it wasn't very surprising yesterday. The Swiss National Bank cut rates from 1 3/4 to 1.5. I remember being in Switzerland for Christmas to see family, and the dollar was like at multi-year lows at the time at 83 Swiss cents. And I thought to myself, they're not going to let this stay here, because Switzerland depends on a lot of exports and tourism. And I thought to myself, they're probably going to cut rates in the spring. And lo and behold, they did. And I was just reading recently, or this morning, in the FT, that the governor of the Bank of England is pointing to rate cuts later on this year. He doesn't seem to be too concerned with the fact that the CPI, which they look at CPI as inflation, is still way above the target of 2%. It's at 3.4%. And I would add that a couple of years ago, the government here in the UK, through the Office of National Statistics, they basically changed the methodology of calculating CPI, and it's probably in reality, it's probably more than 1% higher. So what this shows to me is that the central bankers, they're desperate to cut, because there's trouble out there in the banking system, because most banks nowadays hold a lot of government bonds, and the higher rates go, the lower the value of those bonds go, and I think that's what's happening out there.
And it seems like we're seeing the markets catch up to, the easy money policy that is probably ahead for a lot of these central banks. And it sounds like some central banks are already moving in that direction. So what is your take on, you've called it the Crackup Boom. A lot of people have been talking about this melt up for a while. It seems like we're finally seeing that. Your perspective on how the markets are reacting?
Yeah, a Crackup Boom, or also a hyperinflation. That's a term that Ludwig von Mises used in his work. And basically that happens when the markets and also consumers, everyday people, realize that inflation is a deliberate policy by the government. And I think that's why we're seeing the S&P, we're seeing cryptocurrencies, we're seeing now gold, of course, making new highs. Silver, not so much, but I think it's only a matter of time. That's why we're seeing all these. It seems like prices are rising, but I would say people are waking up and thinking, they're never going to allow the financial markets to be in jeopardy, i.e., to have not have enough liquidity. And one of the reasons Powell said they're going to slow down the QT is because he's concerned about liquidity in the system. And that's when you get the Crackup Boom. And it can be very fast. That's what von Mises said. It can happen in a matter of weeks, and when people realize that. Right now, I think the majority of the mainstream media, the majority of the public still buy into this narrative that the central banks have done a good job in controlling inflation. They've brought it down and everything is fine now. But the way I see it, they don't really look at the real inflation, which is the increase in the amount of currency and credit out there, which is the other side of the coin of the national debt and all the deficit spending. And that's why I think markets are reacting as they are. And markets expect that if there's any trouble, the Fed and other central banks will step in and create all that central bank money, which is called reserves, out of thin air to save everyone again. So that's why I think gold has made an all-time high. And silver, in my opinion, is a steal and is probably ready to break out very soon. But the bullion banks and the bankers are trying to desperately to keep it below $26, which I think is a key level.
Now, if we can talk a bit about silver, because I know you had a video comparing what happened to cocoa and what is happening with silver right now. It's kind of a triangle pattern we're seeing. And what happened to cocoa is it just went straight up after it broke out of that pattern. So what do you anticipate for silver, especially if we keep seeing record highs for gold?
Yeah, that's one of the reasons. I mean, if gold was still languishing around 1900 or 2000, I probably wouldn't have read much into that chart of cocoa. But I went back to the early 70s and with both cocoa and silver, and their charts look very similar, except for the move higher in 2011, where cocoa didn't really match its high from 1980 or the early 70s. They look like a huge cup and handle, and the handle that we've been forming in silver since, let's say, 2020, 2021, we're still within that like handle triangle. And cocoa had the same kind of formation, and it broke out of that triangle last year, and it's taken a few months, but it's gone from around $2,500 to $3,000 a ton. And I think the last I saw this morning was above $8,000. So it's a massive, like 3.5 times. So if you translate that to silver, and if we break like 26, 25, we could see silver easily above 50 in the next few months. I'm not saying it's going to happen right away, because if you look at the monthly cocoa chart, it's taken a while for it to do what it's done. But in the last month or so, it's really gone parabolic.
And what are the risks out there as well? Because it seems like some people are anticipating this melt up being followed by a crash. I know David Hunter has talked about that for so long that we could see, 70, 80% stock market crash. So your perspective on that and how the metals may react to that?
I think the biggest risk really is the collapse of all the currencies, because that's what a melt up points to. The stock market, I could, not care less, but I think it's irrelevant, because if they lose control of the currency, and by that I mean if gold goes parabolic, it doesn't matter if the Dow is at 100,000 or the S&P is at 20,000, while gold is at unimaginable levels. So I think the biggest risk is not really a crash of the stock market, but a crash of the currencies. And I think very few people see that. because they're so focused on the stock market. And maybe the reason I see it is because I'm not in the US. I grew up in Brazil, and currencies are really important to other people around the world, because Americans have never had to worry about currency. As the former Secretary of the Treasury, John Connolly, said to a European official, yes, the dollar is our currency, but it's your problem. So I think it's going to flip. And that's why I think the biggest risk is not just the dollar that's going to could completely collapse. It's all other fiat currencies. So if you're thinking that you can hedge collapse of the dollar by buying euro or Swiss franc or pounds, I think you're going to be wrong. So that is, I think, the biggest risk. I wouldn't be. I think if you've got some gold and you've got stock market investment, yeah, you just hold on to it, because I don't think the central banks are going to allow the stock market to crash. They're just going to keep pumping it up, and that's going to accentuate this melt up.
Now, when it comes to the rate of inflation, you talked about how different governments will tinker with their official rate of inflation to make it seem like it's less. And I know that's happened in the US. There are obviously official reasons for why they changed the metric and everything. But if you go to like shadowstats.com, inflation as it was measured in the 80s, if you take that to today, it's much higher than what the CPI shows. So it's really interesting to get that perspective on inflation. Now, you recently put out a video explaining how you could measure inflation instead based on gold. So what is gold telling us about the current rate of inflation today?
Well, the problem with inflation and how it's defined today is that they define it as the price rises, which is not really inflation. Inflation is the increase in the supply of money and credit, or currency and credit. The way, if you look back prior to a fiat currency regime, the supply of currency and credit depend on how much gold you had in the system. So if you look at In Gold We Trust, Incrementum, they keep the scorecard of gold in all major currencies since the year 2000. And gold has averaged, I think in dollars, has gone up 9.3% per annum on average since the year 2000. In pounds, it's just above 10. So I would say that's the real rate of inflation, because it's telling me that the supply of currency is increasing about 10% more than the supply of gold out there. So that's the true inflation, and that's why people always complain. They say, "Oh, the CPI is bogus because things are going up a lot more." Well, there you go. That's because CPI is just like they have a hedonic. They use hedonics. They say a car in 1990, let's say, was $20,000. Now it's $60,000. They say, oh, because of all the improvements, that car is really only worth 20. So they don't put any of the increases onto the CPI. But you can't go to a car dealership and say, I want to buy the hedonic. I want to pay the hedonically adjusted price. He'll laugh at you, right?
That's a good point. Now, when it comes to what the Fed is doing right now, it seems like we've been talking for a while that it seems like the Fed is trapped. But it really does seem like in the next few months, this is coming to a head, because inflation is, even by the official metric, hotter than expected, right? More than the Fed is looking for, but they're looking to lower rates as well. So do you anticipate something breaking by the end of the year? Or when do you think the Fed really realizes that they're trapped in this situation? They can't lower rates without having inflation get out of control again.
Yeah, it's really hard to say when something's going to happen in terms of a crisis, but I definitely think they are concerned about it. And as I said earlier, the fact that they announced they're going to slow down the amount of QT, I don't think anyone was expecting the Fed to announce that. So But I can't really tell you. Some people might argue, oh, it's an election year. They won't let that happen, some kind of crash. But it did in 2008, just before the election. So if I had to guess, it would be before November. That's the best I can do. So next, let's say, 5 months or so, or 7 months.
And we talk a lot about protecting ourselves with precious metals, obviously, as a way to hedge against this inflation. Do you have any updated thoughts on other ways that people can protect themselves in this economic turmoil, I guess you could say?
Yeah, I think just knowing what's going on, unplugging from the mainstream and watching more people like you and me, and living within your means. And yeah, don't buy into this story that the economy is doing well. And that's important because you might be deciding whether you want to start a business, something like that. And sometimes the official narrative gives you the wrong signal. So I think that's, just questioning what government tells you and central bankers tell you, and try to stay out of that. Is very tempting to borrow and to buy, let's say, assets that you think are going to go up because they're going to try to inflate it. But yeah, hold off from that temptation, I would say.
And if our viewers are interested in learning more, where can our viewers find you online?
Yes, I post a video every day on YouTube at Maneco64, Maneco 64, and I'm on Twitter quite a bit, or X, at Maneco 1964.
Fantastic, Mario. Once again, thank you so much for your time. Any last thoughts before we let you go?
Yeah, I mean, don't be fearful and just keep calm.
Fantastic, Mario. Thank you so much for your time, and God bless.
God bless.